some forex trading. So I want to give you a very simple way in which you can improve your forex trading strategy by like 90%. So if you're someone who has been trading or you're thinking about trading, I want to tell you how you can eliminate a lot of noise in the market every single day when you go into the market to trade. This particular thing or this simple trick I'm going to give you will just allow you to eliminate a lot of movements and noise and decisions that you need to eliminate, because once you start trading, you always want to make sure that you eliminate as much noise as possible. Hey guys, this is Ken's Money Matters, and here we talk about the money mindset, how to make that money, how to enjoy that money, how to manage that money, how to invest that money, and how to assure yourself of a lifetime of income, basically financial freedom. So it's Forex today, and we want to look at how you can create what we call a bias. Now, I do tell people, before you learn how to trade Forex, or before you even think about it, make sure you are ready for the process. It's not an easy process. It's not a simple process. It's not something you're going to get into and start making crazy money. I always debunk this theory that people can make quick money in Forex. That's gambling. So you can come and gamble. You will lose your money, I promise you. But if you actually focus on learning this process, if you focus on teaching yourself the same way you teach yourself anything else, the same way you learn anything else, the same way you learn skills that are like really high paying, that are important, like programming, that's the same effort, the same dedication, the same seriousness you need to put into Forex trading. And I always say that in all my videos. I don't say it's easy. I don't say it's quick money. I don't say it's simple. I say it requires discipline and dedication. And Forex will teach you so much about yourself. So you want to trade Forex, or you're thinking about it, and you're wondering, what should you do? Okay, before that, I know you're going to ask me, which platform do I use? Or I will tell you which platform I use after this introduction. So today we just want to look at what we call a bias. How do you create a bias? What's a bias? A bias is basically me getting into the market and knowing which direction do I want to go. Because the main thing is, you're either going up, down, sideways. There are three directions that the market can go towards, right? It can go up, can go down, can go sideways. Three directions. Now, when you come into the market in the morning and you want to make a very simple decision of which direction am I focused on, so that when you're looking at your market and looking for opportunities, you are clear on where you want to go. That eliminates 70% of the noise from the market. It makes you focus on one direction, makes you focus on finding single opportunities that will give you maximum returns. Not you going, oh, you see it going up, you buy. You see it going down, you sell. You see it going, whatever it is. So you just end up, messing yourself up and getting into this proper gambling mode and what we call revenge trading, because you're going to lose money, you're going to be angry, you're going to be frustrated, and it's not going to work out well for you, because what you're doing is thinking that you can basically foretell. You see something going, then you think, oh, let me swim with that. You see something going, let me swim with that. That's not how it works. I'm going to teach you a very simple strategy of 5 minutes and how to do this. Let's go. I say this all the time. Just down below in the description, there's a link to FX Pesa, and here you can do so much with FX Pesa. You can trade, you can buy international stocks as well. They are regulated. I've worked with them for a while now, no complaints, no issues. If you want to open a demo account, you can open a demo account and start trading. If you want to open a live account, you can open a live account and put in money and start your trading journey. And again, you can also just invest, right? You can buy some particular coin, or you can buy, not coin, this is not crypto, sorry. You can buy a particular pair that you think is going to do well in the next few months or so, and leave your money in there. You don't have to day trade, you don't have to swing trade. You can just hold your position if you have enough information about what could happen. So yeah, FX Pesa, down below you will find a link to any platform that you need, and they have different platforms. They have the MT4, MT5. This is a web version as well. FX Pesa, this is a web version. It works really well. You don't have to download anything. They have a mobile version, depending on what you want. So assuming that you have some knowledge about Forex in this case, let's dive in and let me show you how you can make your life really easy. So this is of course, the time frames up here. We have the indicators. Down here we have, of course, the tools, drawing tools that you might need, and here we have your chart. And of course, we will have the buying panel. If you want to just minimize this to see everything, you minimize, and then you can see all your pairs down here. You can see all your pairs here that you would want to trade. You can see commodities if you want. You can see stocks if you want. You can see indices if you want. So easy platform, straightforward. I don't see anything that would make it difficult to use. This is the trading panel. So here you can always trade whatever it is you want to trade. It tells you the pip value, the margin required, whether you are selling or buying. And then you can open your trade, stop loss, take profit levels, the pips, price and the value. Very easy, straightforward, very simple. I love it. And of course, like I said, I maximize it so I can see the chart. How do you come to the market? So you come in the morning, you decide, oh, I want to trade today, but you're wondering which direction do I want to go, or what do I want to do? Do I want to buy the market? Do I want to sell the market? People will say, look at the trend of the market, but the trend can be different. The trend can be different. You can have a 5-minute trend, you can have a 15-minute trend, you can have a 30-minute trend, you can have a 4-hour trend, and sometimes they're different. Like you can see 4-hour, we can see a bit of like a downtrend, but generally speaking, it's been an uptrend for a long time, even though it's been going down for a few weeks now. But if you come down here to 5 minutes, you see a clear downtrend, no question, right? So it depends on where you are. It depends on which time frame you're looking, and that's why I always say you must do what we call multi-time frame analysis, which I'll teach in another session. Let me know in the comment section if you want that. But here you come to the daily. If you want to know the direction you want to go to, what you do is go to a higher time frame. Now, if you're a day trader, you want to go to the daily. That's a high time frame. You can go to the weekly sometimes, but that's like if you're a swing trader. So you're going to hold your trade for some days. If you're just a day trader, or you're going to trade in the 1-hour time frame, 30 minutes or 15 minutes time frame, then going to the daily is okay. That's your higher time frame in this case. Then you look at the trend. So if you were to draw a trend here, you'd say that, let's draw the trend. So you could say, let's draw that here. It goes clearly up, and then you say, oh, this trend has been going up, right? No worries. But you want to look at, because you're trading on a much smaller time frame, you want to look at what has been happening the last few days. So you don't care so much about what's happening big time. You care about it, but not so much. You only care about it as long as there's a significant level or a point of price reaction that you are expecting. But if you're not expecting any, then you just need to know that long term it's been going up, and therefore once it gets to this trend line, you might be ready for some kind of rebounds towards the upside. But for now, what's been happening the last few days, you can see a clear downtrend with the nice rejections at the top. And then you're thinking, okay, so you in the market on, let's say, Friday. So I'm shooting this video on a Sunday, and this was on a Friday, 28th of this was on a Thursday, which was 28th, I believe. Let's see now. I'm wrong. The last one, that's 29th, which was on Thursday. That's strange. Why don't they have their Friday marking? So anyway, you can see the candlesticks, and you can see here we have the 27th of February, we have the 28th February, then we have the 29th of February. So here, so if you're looking at it, you can see the clear trend coming down, a very clear downtrend. There have been some rejections, and if you are clever enough, you could see as well that let me draw. You can see this point to this point is like a double top here that we need to look at as well. So you want to see that this double top has been respected and the channel has been coming down. So you can see very clearly that there has been a market rejection, forming a very nice double top here. This is a chart pattern. So for someone who's doing the daily trading, daily holding position, you could be taking this one on the downside. But for someone trading on a lower time frame, you're thinking, okay, so what is this? What's the market likely to do? So yes, you've seen this bullish move on the 27th, but you shouldn't have taken this bullish move, because you know what, the market is going down. We have that double top there. So the next day we have another bearish move as well. That takes us to the direction we want to. Then you come here on the 29th. You come here on the 29th, and you look at your indicator, and you're wondering, where should I be going to? Number one, you want to look at the last few days. You can see a very clear rejection. You can see a very clear downtrend. That's giving you an indication already. And then you have a very bearish move here with a very long wick here. It means when you're coming to the market on the 29th, you're expecting more sellers to be in the market, because there's a very high strength of sellers in this market towards the direction that we expect that the market has been going anyways, because of this double top right here. So when we see this one, what do? We're expecting that there will be a move down. But one thing you must understand with Forex is that it will not just move towards one direction in a day. So within that day, they will do what we call price manipulation, whereby it will probably move up before it takes its real position and starts moving down. So that's what the price did on this day. Price moved up to the highest point, and then you know what, later in the day, price was pushed down. So if you are looking for biasness on this day, on the 29th of February, then you are looking for an opportunity to sell or short the market. That eliminates every noise. So once you go back to your trading time frame, let's say it's the 1 hour, you already know which direction you want to go to, and you can see here very clearly there were opportunities to move this market down, and it did move down a lot. So you just want to be sure that you're looking at the right things. So again, make sure you understand where your market is. Make sure you understand that creating your bias is as important as anything else. Create your bias. Make sure you understand where you want the market to go. So if you go and check the 1 hour chart and look at the 29th, at 1 you see this huge double top here. So it come here, takes out that liquidity, a bit of manipulation here. You might think that the price is going up. What happens? The price goes down because this bearish move. This is why I'm telling you must have a bias, because probably if you saw this huge bullish move, you'd be fooled to think that you want to go up because you're buying, and that's gambling. You had to wait for your opportunity because your bias was short selling, was down. You want to go down, you want to sell the market. So don't go into the market trying to buy just because you've seen a bullish move. No, the price is still manipulating. That's a manipulation. Then it takes its true position, and for that whole day you see what happened. Boom, you made good money, and you would be targeting it right here at this level, which it touched and bounced again. That eliminates most of the noise when it comes to trading. Simple, easy, straightforward, nothing complicated, nothing scientific in there. It's all about reasoning like a buyer or a seller. Let me know what you think in the comment section. Until next time, I'm out.